All right, two topics today for Matt's Market Minute. Let's cover the first one. It's actually going to dovetail into what I talked about in my last video, so let's go. Okay, so the first thing is I told you to be watching for a speed up in the market to kind of maybe mark a short-term top. And I think we've kind of seen that, sort of. So let me explain. Okay, so on Wednesday, we saw the market gap up and then continue higher, and it just really exploded into the close. Now that a couple days have gone by, it doesn't look as dramatic as it was at the time, but you can see it went up all throughout the day, and then this last two 15-minute candlesticks were just, I'm sorry, this is the last candlestick right here of the day on Wednesday. So it started at 3:45 p.m. at 560 and went as high as 561.74-ish in the last 15 minutes of trade. So now you can't see, what you cannot appreciate on this chart is the speed and the violence of that candle. I watched it live, okay? I saw it go, not just steadily plod along, but like whoosh, right? It was almost like someone was short and they said, oh no, I gotta cover my short, someone with a big short position, and it just avalanched the market and took out all the ask and just all the way up, right? And then we had a little bit more of that the next morning, and then we flushed down real nicely on Thursday, okay? So that's what I was talking about in my last video. You watch that kind of when it's going up, and it seems like it's not going to go down, and all of a sudden it goes whoosh, and it just kind of roars higher. That's when you can start to think about playing the short side, or at least you want to think about getting out of your longs. Now we had that sell-off on Thursday. It was a pretty violent week. Of course, we had CPI, so that's why. And then today, Friday, the market came all the way back, and then what do we have at the close? Another kind of mini, volatile event of the market giving back, almost half of the gains it had earlier in the day. As of 1:30, it lost, 3 points on the SPY. I mean, that's a big move in two candlesticks in 30 minutes. Okay, so my point is that we're seeing that sort of toppiness, right? So that doesn't mean that things can't keep going higher. They actually are going higher, but it's just not the normal things. Like Nvidia did not make a new high after it peaked out the other day. There's other things making new highs now, small caps like the IWM. Okay, so that's what I want to talk about next, where money is flowing into. So money is flowing into these stocks that have been getting hammered for the last, I don't know, year and a half, 2 years. I'll give you an example. Okay, SEDG. So this is an unprofitable solar company. All right, now look at this trend ever since Wednesday. I'm sorry, the CPI came out on Thursday morning, right? But still, it's been trending up ever since then, because we actually had a cool CPI a month ago too, right? So 2 cool CPIs in a row, that means inflation is cooling. Now, what that means for a company like this, because interest rates are going down now, is that unprofitable companies like this that need to borrow a lot of money just to keep the lights on, so to speak, in order so they can get to a point of profitability, what they need interest rates to come down. So money is now rotating out of stocks, of companies that are like super high quality, like Nvidia, and they're rotating in to companies like, believe it or not, SolarEdge with a lot of debt. Okay, so, and that's because they can now borrow money at a cheaper rate, right? A cheaper interest rate. So the market's starting to price that in, even though maybe didn't make a big difference for the company today or yesterday, it's going to start to make a difference for them. And you'll start to see that ideally reflected in their earnings reports moving forward. So that was just a couple things I wanted to cover. And maybe the next video we'll talk about Apple, because earnings are coming up the 1st of August. So, but that's just 2 topics for today. They kind of blow off top in the SPY, and then the rotation into a little bit more crappy stocks like SEDG. So if you've got a stock you've been looking at that's been beat down a lot, that has a high debt load, now might be the time to start looking at that as interest rates start to go lower. That's it, guys. Have a good weekend.